partner from White & Case, to introduce our guest speaker.
Members and guests, it's my great pleasure today to introduce today's speaker. Johan van Jaarsveld was appointed Chief Development Officer at BHP in September 2020, and in this role is a member of BHP's executive leadership team, responsible for setting the strategy for the business, capital planning, and developing and growing the portfolio in line with that strategy. Johan joined BHP in 2016 as Group Portfolio Strategy and Development Officer. By any measure, it's been a very busy period for Johan and his team. BHP has sold its US shale business, and then more recently, it demerged and merged its oil and gas assets with Woodside. The company has also sold most of its thermal coal assets around the world and some metallurgical coal assets in Queensland. Johan has led the unification of BHP's corporate structure under BHP Group Limited, making BHP simpler and more agile today and removing the DLC discount of the last 20 years. During the same period, the company has started construction of a giant potash mine in Saskatchewan, in Canada, invested in a nickel project in Tanzania, and increased exploration in South America, the US, Canada, and Australia. The most recent acquisition of Oz Minerals will support the development of a copper province in South Australia that has potential to compete with the great copper-producing jurisdictions of the world. Johan has more than 20 years' experience working in the resources and finance industries. He has worked with companies many of you would be familiar with, including Barrick Gold, Goldman Sachs, the Blackstone Group, and Lehman Brothers. And his passport is well worn. He's worked across Asia, including Hong Kong and China, in Canada, South Africa, and of course Australia. Johan brings a unique perspective on investment in mining from both sides of the fence, and I expect it will be a fascinating discussion on the factors that he weighs up when looking for value, growth, and returns for BHP. Johan holds a PhD in engineering, extractive metallurgy from the University of Melbourne, a Master's in Finance from the Melbourne Business School, and a Bachelor of Chemical Engineering from Stellenbosch University, South Africa. Speaking to him earlier today, he said the most precious commodity in his life is spending time with his family and sleep. With energetic young children and a job that sees him travel around the world from his home base in Melbourne every 6 weeks or so, that makes complete sense. And we might ask him for a few tips on how to manage jet lag. Members and guests, please welcome Johan to the stage, and as he's making his way up, we'll play a short video featuring the first cohort of participants in BHP's new incubator program, BHP Explore.
BHP Explore has developed a cohort-based program that is committed to discovering the critical minerals needed for the world's future. We are looking for startups that are in the early exploration stages of the value chain, specifically focused on finding new resources. We will offer candidates in-kind services, mentorship, and networking opportunities with industry and investors. Through this program, BHP Explore hopes to create disruptive results in minerals exploration by identifying new concepts, leveraging new data, and testing opportunities at a much faster pace than discoveries to date. From 250 applications received from around the world, meet the 7 global exploration companies who participated in the program's first cohort.
Nordic Nickel is an ASX-listed nickel sulphide explorer based in 2 projects in northern Finland and central Lapland Greenstone Belt. We'll be drilling there for the next 12 months at least, 22,000 metres of drilling underway.
We have a known copper showing on Somerset Island in the Arctic, which is known to consist of quite a large alteration zone. The goal for this year is to visit that area again and sample it as thoroughly as possible, map it, and seeing how far we can extend that mineralization model to other showings in the area.
We are looking for copper. It's obviously one of the critical minerals that BHP is looking for.
We have a wide portfolio of land holding in Western Australia as well as New South Wales. We think there is a significant budget of copper left to be discovered.
For BHP Explore, we are participating for our magmatic nickel sulfide exploration project in the western part of Mongolia.
We are a private company based in Brisbane in Queensland, Australia. The horizon where we think the copper mineralisation sits has never been drill tested. It's under 100 or 300 metres of younger cover, and so it's completely blind.
So we use geophysics. So we fly magnetics because the Earth's magnetic. We use gravity because the Earth's got a density.
Tumu Metals is exploring for new magmatic copper-nickel systems in Africa. The focus is very much on looking for these nickel-copper systems, which we know exist in this part of the world.
We're exploring 2 nickel belts in Finland and Norway from the grassroots stage, hoping to generate multiple targets.
Scandinavia's got a long mining history, but actually not that much recent exploration.
Thank you, Johan. Oh, we need... Testing, testing. Yep, okay. Sorry about that. Thank you, Johan, and thanks for joining me. I guess one of the most exciting things about the majors in the mining industry in the past couple of years is that they're now thinking about growth again. Could you give us an overview of BHP's growth strategy and how you're thinking about growth?
Yes, Kristie, thank you, and very good to be here in my hometown today. I think if we sort of stay back and we think about the mega trends that you hear us talk a lot about, urbanization, decarbonization, and electrification of all kinds of value chains, there is just, it sort of gets you to this point where, in terms of strategy, we needed to think about how do we play these megatrends, because they're going to absolutely change our lives, and they're gonna change the way we live. They're gonna change almost the way the world operates in a sense. And for BHP, what that means is we have a strategy that's now focused on increasing our portfolio exposure to copper, to nickel, and also to potash. And it's a massive opportunity, as folks know. Many of you in this room involved sort of on the critical mineral side, but at the same time, the challenge is also daunting. So if you think about copper, we estimate that currently there's about 16 million EVs on the road today. This is going to go to about 400 million by the end of the decade. Now, just to build those additional EVs, we're going to need about 26 million tons of copper and 15 million tons of nickel. Now, to supply that, you sort of get the perspective when you think about Escondida, which is the largest copper mine in the world in the BHP portfolio, produces just over 1 million tons of copper currently. And so you need 26 of those. Escondida production years just to build those EVs that we see appearing between now and the end of the decade. And then we haven't talked about renewable power that has to be built out, and the electrification and the charging infrastructure. So a massive role for this entire industry, including BHP, to play in supporting these megatrends that we're seeing. And the strategy is really based on achieving our additional exposure for our portfolio to those megatrends.
So how do you approach that? I mean, obviously there's, some big themes there. How do you approach growth, thinking about those themes?
So given the magnitude of the challenge, if you like, we think about growth in 5 buckets. So first of all, there's the growth that we can generate from our existing portfolio. Some great assets, great resource bases, and the onus is on us and you know, our responsibility to our shareholders to make the most of those resource bases, to extract more from them and to bring cash flows forward. So that's sort of the first bucket, using the stuff we've got. Then the second bucket is around technology and what we can do to make uneconomic resource economic, the application of technology. We can come back to that later, potentially. And then we're looking at early stage options. That's where we buy options in resources that other folks have discovered, and that in the fullness of time as a de-risk, maybe a BHP resource or maybe not. But we create an option in our portfolio. The fourth bit is the conventional exploration, and we have sort of doubled our exploration budget over the last few years, and then this will continue to go up. And then we augment that with programs like Explore that you've just seen, where it's sort of a different approach to increasing that funnel of opportunities that goes into the exploration portfolio. And then obviously, finally, we've got M&A.
We'll come back to M&A for sure.
Sure.
So looking at those five levers, the first 2 are sort of interrelated. Obviously, you've got, you know, the productivity thing, you know, the operational excellence, and the second one is obviously technology to unlock resources which otherwise may not have been economic. You've also established BHP Ventures, which sort of invests in these potential technologies. Can you tell us a little bit more about that?
Yeah, I can. So BHP Ventures, we've kept it by design quite quiet over the last few years. Started it about 3 years ago. We've looked in the last 3 years, we've looked at about 2,000 opportunities. So on average, we look at about 700 a year. And we've made sort of between 20 and 30 investments. And we've really targeted these investments at points in the value chain where a technology unlock would actually make a huge difference, either to our own operations or to the cost curve, if you like. So some of these are public, some are not. I mean, if I take an example, one of the investments that's public is our investment in Boston Metals, for instance, where this is a company based clearly in Boston. And some of the first investments there we've done in conjunction with Bill Gates' family office. But it's a technology that will ultimately help the steel industry decarbonize. So in that case, we invested in a few rounds of the early stage funding, and then we also have a trial running with them around using our Pilbara ore in steel making that doesn't use any carbon. So and where they are right now is on that sort of scale up curve, and we've literally now made steel in the sort of the tens of tons quantums with this technology, using our Pilbara ore and looking at other ores from around the world, and without actually any carbon. So these sort of technologies will change not only our Scope 3 emissions, but obviously be very beneficial to some of our customers. And this is the sort of thing that Ventures does. The other big benefit from Ventures is you become part of that ecosystem, the sort of Silicon Valley technology ecosystem in the dialogue, and we've established internally a way of that information flowing back constantly in real time to the strategy teams, to the business development teams, and for innovation teams as well. So that informs a lot of the decisions that we make on the ground in terms of the new technologies that we see coming over the horizon. And that's the other big benefit of the Ventures team.
So how big is that Ventures team? It must be reasonably large to look at the number of opportunities that you've looked at.
Because it's sort of early stage opportunities, it's not as large as you think. So in terms of sort of, they're scattered around the world. Most of them are based on the west coast of the US. But you know, you should think sort of single, very low double-digit numbers. So in terms of the insights that you gain and the dialogues that you have versus the number of people that you have to add, this is actually very good sort of bang for your buck, if you want to call it that.
So within the 5 levers, number 3 and number 4, the early stage entry and the exploration are also sort of interrelated. We'll start with exploration. You guys have increased your sort of focus on exploration in the past few years. How has that been going?
So been going decently. We sort of went through a phase there, you know, when we were simplifying the company, where we sort of took our foot off the pedal a little bit with exploration. Now you can see the exploration budget is for greenfields is now over 100, and sort of in total exploration we're spending about 300 a year now. But really, it's the application of technology that has really moved the needle for us. And you know, I just had a chat to Hugh Morgan here. You know, we've from even from the WMC days. You know, there's so much geological data that we acquired and that BHP produced in our last 130 years, and we've actually digitized all of that now, and it's about 11 terabytes. And running sort of AI, you know, analysis through that, it sort of bring this agnostic view to the interpretation of the data, and it's helped the exploration team to discover our last two discoveries, i.e. Oak Dam, that you'll hear us talk a lot more about in South Australia. That comes out of 1960s data, and it's a WMC geologists that produced those data decades ago, and so, you know, they sort of get another run at discovering something via the AI, if you like. And then there was a more recent one in Arizona, again using existing data, but just the power of that analysis that AI bring. And that the one that we had a discovery in Arizona recently, we called Ocelot, and you will hear us talk a little bit more about that in the future as well. So very sort of exciting. Some of the exploration is how we used to do it, and then this technology overlay make it a lot more exciting, but also a lot more efficient, if you like.
And early stage entry, you've obviously done a few deals. Kabanga comes to mind in Tanzania. Can you tell us a little bit more about those?
Yeah, so I think this is one where it's a bit different from the BHP of the past. We are more open to partnering, and you would see us on the early stage option strategy. We will always partner with folks, recognizing that in some cases we don't have the operating expertise in some of these countries, but that's where the resources are. And in other cases, you know, you do it for risk-sharing purposes as well. We think we bring certain technical skills and certain sort of financial size to a transaction. At the same time, our partners bring a different view of the world, different risk appetite, and putting this together in partnerships where that partnership create an option for BHP. This has sort of been the approach. So Kabanga is a case in point. You would have seen us made some investments in Brixton Metals in Midland. We've obviously made the investment in Philo as well, Philo Mining. That's got a great asset down in Argentina. And I think this is very much the way of the future for us. And then as the asset de-risk, with the benefit of the partners' capabilities, our capabilities, we have the opportunity to turn our exposure up over time or down if it doesn't develop like we expect going out. But on a risk-reward perspective, we think it's a real winner, sort of for both sides.
So everyone saw the video on Explore just before. That's been a little bit of a different approach for BHP, a bit of a Silicon Valley style incubator. How did the idea come about, and where does BHP see this going?
Yeah, so the idea, and we're very proud of Explore. You know, the idea came out of a bit of strategy work we did to try and answer the question how we can become the capital provider of choice for early stage mining companies. And you know, as you sort of go through that thinking process, we went through all the normal stuff that, you know, should we fund, should we seed a fund, you know, do you do early partnering? And eventually settled on this idea of starting an incubator program and then adapting that. And there are some of these in Silicon Valley today. Y Combinator is a good example of one. And, you know, we have Airbnb today as a result of that, and Dropbox and a few other things that you would know. And we basically amended that to work for mining, because you have slightly longer lead times. And then went from basically a concept to being in the market with it in about 4 months. So sort of a very sort of agile approach to, and sort of say, okay, let's start this thing. Let's put one foot in front of the other and let's see where this goes. And then we staffed it up with folks that, you know, was sort of excited about the concept. Nobody in that team has any experience doing anything like this. But we just decide we're gonna back our team and give them some free rein and explore as the result. So over 200 applications in the first year. We had 7 companies come out the back end, you know, that we've put through the program, and they now free to go and raise capital, and they have the right structures in place, and management is trained up. And in the case of 3 of them, we've also decided to make investments. They're under no obligation to take our money. But that's sort of the cadence that we established over the last year, and we've just opened the applications for next year's round. And then I think where this ends is over time we're hoping to do an annual cadence of sort of explore, and any of these early stage mining companies that was sort of get a bit of a boost, get access to BHP technology, people, expertise, and capital. Can apply and go through the program, and hopefully, you know, we learn. Well, not hopefully, we absolutely learn from them in terms of their view of the world, their view of geology, and hopefully they benefit from us as well. You know, in terms of having a better company at the end of the day and getting there quicker. And that's sort of hoping this will become an annual sort of cadence for us.
So obviously, you know, the first round's done, second round's open now. How has your approach to the sort of the second year changed after the first year?
There's a few small things that we've changed. You know, it's quite a heavy social media effort, but you know, by all accounts, we're not going to lengthen any time frames. I think on sort of like for like. Applications are up about 30 or 40% already, early days, but just on where we were a year ago at the same time. So for now, I don't think anything is going to change. I think we will ultimately target again sort of between 6 and 8 companies that we can put through the program. But at this point, you know, we very much still want to focus on our favorite commodities, nickel, copper, and potash. And obviously, geography-wise, we're relatively agnostic on where these companies are based and where their assets are based. But nothing big at this stage that we think that we need to change on this.
So the 5th lever is the one that excites most people, and as a former investment banker, you must know this. So M&A. You guys completed the deal, the $10 billion acquisition of Oz Minerals. How are you thinking about M&A?
Yeah, no, we run the risk here that we go over time with this one. First of all, let me say investment banking, it's not what it was in terms of, you know, I was saying to John before that the folks that really make the money these days are the lawyers, I think. You know, in terms of M&A, this is one that, you know, people like to write about and everybody likes to talk about. And then you go back to the first lever, which is productivity. And you know, in terms of productivity, and I'll come back to the M&A, BHP, if we can save 10% of our cost base, that's $20 billion in value. It's under our control. Now, the last time anybody created value, $20 billion with an M&A deal, I'd sort of like them to come and tell me what that deal was, because I sort of can't see that that's ever happened in the last, certainly, 10 or 20 years. But the reason I'm saying this is just to illustrate how tough it is to make money with M&A. And you know, you've got to be ready. And like all companies, that's worth their salt. You know, we have a team, and we know what we like to look at. And I'll put the list up at the end of the presentation. But ultimately, you have to be patient, you have to be disciplined, and you have to just sometimes wait for the right opportunity. This is a cyclical industry, and you sometimes can have to wait for 10 years or more to get the right opportunity at the right price. And that is really M&A. Highly uncertain, you can't base a strategy on that, but you've got to be ready for when the time comes. Now more specific to OZ Minerals, we think this was a great deal for shareholders. We are very excited about the prospects of creating this copper province in South Australia. And you know, we'll talk to you all and to the market more about that over time. But a cracking deal, we think, for shareholders and also for the OZ Minerals shareholders. From obviously, I'm going to say that, but from our perspective. So watch the space on that one. M&A, exciting when you can get there, but you've got to absolutely stay disciplined. And as you hear Mike say a lot, we will only do it if we can create value for shareholders, and that remains the position.
And on that, you were one of the deals you didn't do last year was Naront in Canada. How many other deals in the background that we don't know about don't get done? You know, they might get to close to the finish line and then don't get done.
Yeah, it's a really good question. You know, we have this at BHP. We do what we call post-investment reviews. So we look at, once we make an investment, and whether it's a project or a deal, 18 months after we do it, we go back and say, okay, this is what we tell the board and what actually happened, you know, and then we do it like that. And we take the learnings, because sometimes things go wrong. Now, you know, Mike asked us a while back, you know, can you also do one on the deals that we didn't do? And then it's actually an interesting one, because, you know, at what point do you decide not to do a deal? I think there's very few that you have that we would say we would regret not doing. I mean, in the case of Naront, we pulled out of a bidding situation where we just thought the price was getting too rich, and we will remain disciplined like that. But yeah, there are deals where you look back at a point in the cycle where a company was trading at a certain level, and you think, okay, if we did the deal at that point, we would have created X billion dollars in value today. But the reality is there's so many factors that go into whether the deal can get done. I mean, there's the value, but then there's also where your shareholders are at that point in time. Do they trust management? You know, is your balance sheet in the right place? So it's hard to go and look at that sort of analysis. But we continue to try and learn as well from the stuff that we didn't do. And obviously 15 years ago or so, if you go back 15 years with BHP, there's quite a few things that we didn't do. And I think there's very few of those that we don't, that we look back today and say, oh, we regret not doing them.
Obviously, the other side of M&A is being a seller of assets. There's a process running over, you know, a couple of coal assets at the moment. How is that progressing?
All I can say on that one, it's progressing.
And does that pave the way for further coal asset sales, or, you know, thinking about the commodity mix?
Yeah, you know, we always think about the commodity mix. You know, these assets that we were selling the last couple of years, I think we started doing it about 3 years ago, 2020. We talked about it the first time. Really, the rationale was very clear. These assets were producing, apart from the thermal assets, were producing a semi-soft product that we thought will become disadvantaged probably earlier than the hard coking product. And as it turns out, over the subsequent years, that product has actually done extremely well. But we didn't want to get caught in a place, say 10, 15 years from now, where that product, we can't extract the right premium for it anymore, and the decision was then made to sell these mines now. Now, we look at the portfolio regularly. I can say for now, yeah, that's it. We're done for now. We are still a believer in met coal as well, as it has to support steel making. There's no alternative, and it has to help us, help the world to decarbonize through the production of steel. So it's not an indication that we've given up hope on met coal. But at the same time, we do want to continue to pivot the portfolio a bit more towards what we call future-facing commodities.
Just on that, and I know you get this question a lot, why not lithium?
Yeah, so I was going to actually, the why not lithium question, I was going to throw it to Tim Goyder, that's sitting here. But and certainly he can give you the long-term pricing, which I can't do. Lithium is an interesting one. We get it a lot, you're right. And there's a lot of folks in this room, I think, that is going to make huge amounts of money out of lithium over the coming months and years. Now, for BHP, we sort of have a view, and I'll sort of put that view forward. And that is really that we sort of have to think, if we're going to build a new business in BHP, one, it has to be a material-sized business, but two, we need to have conviction that that business over the really long term, and the long term, yes, a 20, 30-year view, we can build a proper commodity pillar in that business for our shareholders, and that it can remain big enough. And when we think about lithium, is that yes, there's a bit of a crunch, but if you think about supply and where the supply occur in the world, we think that's over time going to work its way through, and there's actually a lot of lithium supply. Lithium is not nearly as constrained as copper. So what you see over time is that the lithium cost curve will really flatten out, and your ability to extract value at sort of the bottom of the curve is going to be really curtailed, unless you own the absolute best assets. And many of those assets are based in places like South America with really disadvantaged ESG footprints. Now, having said all that, we do here and there invest in technologies that can be applied to lithium extraction through the ventures team, and that gives us good insight on what might come over the horizon that could change our view on lithium. But as it stands, hard to see BHP build a big enough business that can stay sort of cash flow positive over a 20-year time frame, and that's sort of where we landed with our analysis. At the same time, I think we respect that there's a lot of capital flowing into lithium, and that there is a lot of money going to be made by folks in this room, I think, as well, over the next couple of years.
Well, I think that's all the time we've got, but we do have about 10 minutes for questions. So I'm going to throw to Sally, who will facilitate the Q&A. Yep, Thank you, Johan.
Thanks, Kristie.
Thank you.
Thanks, Johan, for such a fantastic conversation. Now to questions from the floor, and I'm sure there's many waiting. So do put your hand up if you'd like to ask a question, and Rowan and Hedley have the microphones out there. Please stand to ask your question and let us know your name and where you're from as well. I think we have one over here. Thank you.
It'll come on. Thanks very much, Johan. Very great insights. My name's Gavin Lind. I'm the CEO of the Mining and Automotive Skills Alliance, one of the federal government's 10 jobs and skills councils, looking at innovative ways of how we prepare the future workforce. How does skills, education and training play a role in your portfolio, Johan? I'd be curious to hear.
Yeah, Gavin, thank you. I think the biggest role that skills play, and of course, Jad, who is our Chief People Officer, sort of primarily responsible for that. We do look at skills and skill development in the context of strategy. So part of my team is responsible for sort of long-term strategy for BHP. And as we look forward in terms of where we want to take the portfolio, but also what is over time going to happen to our assets. So if you think about some of our assets that's say open pit assets today, over time they might become underground assets. We might need more block caving skills to be able to, or capability to be able to mine our assets. So there is sort of a mechanism for looking forward and making sure we skill up the workforce. The other big impact is the impact of automation, and we're going through that at many of our sites now with autonomous truck, and there's going to be another step up when we go and electrify everything, and a lot of this will happen before end of the decade. The type of skills that you need does change from potentially from having lots of truck drivers or lots of train drivers to other types of skills that's more data-based, and we're acutely aware of that. So we sort of discuss this annually with our board as well, but it very much formed part of when the strategy go together. We think the third leg of our strategy, we have a little mantra when we talk about strategy. It's right commodity, right assets, and right capability. And you need all three of those to work together to actually create value through strategy. So it's a core part, if you like, of how we think about strategy and trying to stay ahead of that curve and what we're going to need to keep the business as optimized as possible.
Thanks, Johan. I think we have one up with Headley at the back of the room.
Hey, this might be a bit of a broad question, but in terms of M&A, where do you think is the best mining jurisdiction, country, to, I guess, purchase assets?
And we'll just get you to share your name and where you're from.
I'm Flynn from GBA Capital.
Great, thank you.
Hey, Flynn, you're right, it is a very broad question. I think in the first instance, it's sort of, when you say best, there's a few ways to think about that. I think as far as we're concerned, and if you think about more broader, not only M&A, but also just where do you want to make investments? And M&A is a form of investment. We do sort of as a global company, and a lot of global capital is fungible, and it can move, it's mobile, if you like. And there it's important for countries such as Australia. I would say Australia, Canada, obviously lot of listed companies, smaller listed companies as well in the space. But it is really important for countries to stay competitive. So in the first instance, we would look at what is the sort of returns we can generate in those places, and what's the stability of the fiscal regime, and the governments that we're going to face. What is their sort of approach to having us there? I think that does play a role. You can get something cheap and then find that you can't run it or you can't operate it profitably. So sorry, I'm sort of broadly answering your question. You got to have a good and solid legal system, but it also depends on where the commodities are and the commodities like you and where you can get them for value. But absolutely, the destinations for your capital, whether it's M&A or investment, and we had a few hiccups in Australia over the last year. You've got to take into account what you think that risk is. And I think in places like Australia, for instance, I think it's going the wrong way at the moment. But hopefully that sort of gives you a little bit of a flavour.
Thanks. And one here with Rowan in the middle.
Hi, thanks Johan for your interesting talk. Tim Dobson from Magnetite Mines. Johan, I'm interested in your views on the future of sub 65% DSO hematite-based ores in the decarbonising steel sector going forward.
Yeah, so thanks. And one of my colleagues is sitting at this table. I almost wish she could answer that question. There is, with thinking about sort of decarbonisation, and obviously BHP doesn't have, we're not producing magnetite at the moment. We do think there's going to be as the decarbonisation trends sort of develop, and steel mills have to also start meeting medium-term emission targets, there is certainly the potential for higher FE type products to start attracting more of a premium. We're not currently in the sort of below 60 magnetite product space, and that's just because we don't see investments in that space at the moment be able to compete for capital with some of our other opportunities. Also opportunities in the Pilbara. So hopefully that sort of gives you an indication of what we think about that.
Thanks. With Headley.
Hi, Ben K, BW Equities. I was just wondering if you could give us a view on the nickel coming out of Indonesia, from standing start to 40% of the global production in a very small number of years. What's your view on that looking forward, or you're not taking that into account because it's a very energy-intensive way of producing?
Yeah, it's interesting. We obviously, of course, we do take it into account, and it's amazing what has happened in Indonesia from a sort of capital intensity reduction, also OPEX reduction perspective. It will be interesting to see how that develops over time. As you say, it is more energy intensive. The ESG footprint is very different from sort of a nickel west type sulfide nickel based product. At the same time, the market is not really prepared to pay a premium yet for something that's more ESG friendly in nickel. Now, this may develop over time, but certainly that's what we're seeing right now. The OEMs are very happy to buy that in Indonesia nickel as well. So we're watching this, and this is sort of on a constant watch, and you'll see it's getting more and more press as well, especially with some of the Glencore announcements of the last week. Nothing to be, I think, would be overly concerned about, but we have to factor that in, and the potential for that to further grow. We have to factor that in to how we think about the nickel market long term as well. But despite that, nickel remains a strategic commodity and a critical sort of forward-facing mineral for BHP, and hence our investment in Kabanga, and also the ongoing sort of ownership of Nickel West. But definitely something to watch and see how that develop over time.
I think we've got time for just one more question. Thank you.
Working. Alex Hay, Albany. Just going on from Flynn's question, can you talk about how Australia is competing against other countries for incentives to mining? And you talk about your global expansion. Can you talk more about Australia, and would you invest more or less due to government support, regulation, payroll tax, etc.? Yeah, in terms of sort of our global, I guess, opportunity set to invest, we are doing quite a lot of investment in Chile, and regardless of the fact that the royalty regime and the overall tax take there, if you like, has gone up, we are still making investments there. In the end of the day, we have to sort of think about the risk-reward trade-off for that investment. And do we think we can generate a better return for the risk that we're taking somewhere else? I think the trajectory, and of course, historically, we've invested a lot in Australia, and we're not about to stop now as sort of on a holistic country basis. But a lot of the recent developments that we've seen, sort of from government policies, royalties that get switched on overnight that you read about in the paper, and I think in some ways the lack of dialogue as well, it has to make you step back and say, okay, well, what else is coming, and is this going to remain as an attractive destination for capital, and we stewards of our shareholders' funds here, as it was in the past. And I think just in the sort of very recent history here, Australia's definitely has the potential to go backwards a little bit on many fronts, not only fiscal sort of stability fronts, but also, as you mentioned, labor policies and the outcomes of those. But ultimately, when we make that decision, we factor all of these things into every investment decision, and also our outlook for how these things could change. And the more uncertain that outlook becomes, the higher the required return has to be before you make an investment. And where you have lots and lots of opportunities to invest across many countries in the world, it becomes really important
not only for BHP, but for the entire investment world, that Australia remains stable and that Australia remain a competitive, attractive destination for capital. And you know, we'll see how that develops in the coming years.
Thank you. Thanks, and I'll invite Andrew Hall up now from AMC to give the vote of thanks.
Thank you, Sally, and good afternoon, everyone. It's my pleasure to give the formal vote of thanks to Johan for participating in today's discussion. Johan provided us with great insights into BHP's 5 levers for strategic growth, covering productivity improvement, maximising value from existing resources, exploration and the use of new and emerging technology, early stage entry, and also mergers and acquisitions. Johan also covered BHP's focus on the megatrends of copper, nickel and potash, but not lithium, at least at this stage. It was a very considered and enjoyable discussion. Thank you. It would be remiss of me to also not acknowledge Kristie's facilitation of the conversation. So well done, Kristie, also. But Johan, on behalf of the Melbourne Mining Club and everyone here, we wish you and BHP every success in delivering the 5 key growth levers. Could everyone please join me in extending a very warm thank you to Johan by showing your appreciation in the usual way. Thank you.
And we also have a little gift for Kristie to thank her.
Thank you. Thanks so much.